All right, hey there, Christopher Inks with Texas West Capital. It is just after 11 a.m. Central Standard Time here on Monday, the 6th of July. Hope you all had a great 4th of July. Those of you in the U.S. here, 2021 here in Boerne, Texas. Good to have you all checking in, and I do apologize about last week. I'll tell you what, man, internet here, some places in this area is just it's trying. It's very trying, and so I do apologize for us losing access there last Friday midstream. That was just absolutely awful timing, and not a whole lot I could do about it, unfortunately. Such a crazy thing, but anyway, we're back today, guys. It took guys, I think it took like 4 or 5 hours to finally be able to get back overall for that day. So really just kind of sucked there. But good to see y'all here. Hey, listen, remember, we've still got it going, guys. We've still got interest, so we've still got going. If you haven't done it yet, there it is. There's the code. There's the link. Join us here at howtotradetowin.com. We'd love to have you here, guys, with us. You can get the annual Tier 3 for absolutely lowest price we've ever offered it. And so that's, again, your normal Tier 3 month-to-month is about $199 a month. And this will, on average, it will take that average down to something like $66 or $68 or something. So really crazy low pricing. You'll be sorry. If you're even thinking about it, you'll be sorry you don't take it if you don't do it while we do. So while we have it here with that particular discount there. So jump in there, man. You see a lot of our people, joining in with the live stream. Really great people. I can't imagine you finding a friendlier, more helpful group of people to learn to trade around, especially since trading can be so boring, or not so boring. It can be boring at times, but it can be lonely. It can be lonely. So, yeah, man. By the way, Tier 3, those of you listening in, we usually have our Wyckoff streams on Monday. And I said we were going to do it today, but I've looked here. I've got so much. I'm so backed up with all the DMs and the charts that I have to do up there that I think I'm just going to go ahead and extend this till, let me see. Tomorrow's Wednesday, so tomorrow we have our tips, tricks, and techniques Wednesday stream. Thursday we have our Elliott Wave stream. Why don't we go ahead and do it? Why don't we go ahead and set it for Friday? Friday at 3 p.m. Central Standard Time. And that way we'll be able to catch up after this long holiday weekend and talk about a lot of stuff that's going on. All right. Hopefully that sounds all right. Let me just do something here. Let me see. Let's go ahead and... Nah, not at the moment. I was thinking about entering along here, USD CAD. If you guys have been watching USD CAD this morning, wow. Talk about movement, man. That was the one to be in this morning. I wasn't in it last night, but I did get it in this morning, and I made some money. It's been pretty easy to make that money in USD CAD on the long this morning, so we'll see what's going on locally here. I think we've still got some more upside locally, but overall, it's looking more and more like our bullish count's working on that, and we've probably got quite possibly got that reversal in at the swing low, not too far back there on the macro picture. So it's looking pretty good anyway, man. Whew, with the oil dropping down and then DXY shooting up this morning. So yeah, good stuff. Let me see who's here already. Man, I got to scroll here. You guys talking up a bit. Lamb, what's up? Mark's here. Who else is here? Tell You Rider. Tell You Rider's thinking about chocolate this morning, apparently. Let me see here. Who else? Am I gonna make you wait these 3 minutes? Yes, Lamb. You got the countdown, man. You know what it is. Hey, what's going on, Hank? Devin's checking in. He says, is everyone ready for the pump? I think you're talking about Bitcoin. Man, yeah, we'll talk about that, man. Bitcoin's still kind of just doing that sideways thing. Been absolutely just sideways, man. Driving people nuts. Mutts and nuts. I can't even say it. It's the beginning of the week, guys. You'll have to give me a chance to learn how to speak again. Hey, Rossmar, good to see you. Who else is here? Common Man is here. Says, I can't believe I'm here before it started. Cue the action. What's up? Let me see. Anybody else here? White R21. Michael Williams is here. Nevlusian's checking in. SM Risk is here. Let me see. I think I'm missing some people along the way here. Pixafin checking in from Switzerland, even though they didn't say so. Let's see. Tuesday the 6th. Yes, Tuesday the 6th is today. Did I say something different? I think I said it right. Black Man's Guide to Bitcoin. What's up, man? He says, what is that? EDU and VIPs are bottomed out and moving up now. All right. I haven't looked, so I don't know. Diego, what's up, man? Good to see you. Windy City Assassin checking in. What's up, man? Oh, gosh, man. Let me see you guys. All right. Block Tech. Hey, what's up, man? All right. So let me just check in here, guys. So, yeah, like I said, man, the USD CAD this morning has been the play. Man, it's up hundreds of pips overall. So if y'all been following me with that here for a while, you know I've been trading the heck out of that for the last, I don't know, what has it been, 3 weeks, 4 weeks maybe? So lots of money to be made in that going on there, especially if that bottom's in there, because it's got some pressure toward that upside if so. But let's see here. What's going on with Bitcoin? Let me see here. Ernest of Gaia, what's going on? Yeah, man, tell you what. It's been raining here. It started last night, raining into this morning. Flash flood warnings all around here and everything. Man, oh man. It's been a weekend. Had a good 4th weekend. Hope the rest of you all did as well here in the U.S. And everybody else just had a great weekend anyway. Man, I went and got my eyes checked yesterday. I told you to keep complaining about my eyes here lately, guys. Went and got it done yesterday, so I'll have those glasses more next week now. At least I'll be able to see better. So what's going on with Bitcoin? Well, this is what's going on with Bitcoin. This is just a bunch of sideways. That's all it is. If you guys find you're having trouble trading it, it's because it is sideways. It is, it's just the most difficult thing to trade. But that said, we did have these 2 targets off of last week, which both were hit over this weekend, as you can see here. We had the pattern-based target here based on this descending channel. So the breakout there, it came back, retested as support, which it usually does, and then took off. We also had this possible, at the time, was a possible Adam and Eve double bottom. We needed a breakout above this red line here, which we did. You can see how it ran up to it, pulled back, and then broke out impulsively. Big volume, spike there locally, large candle spread. That's what you're looking for. Stayed above it, went up here, hit the target. So both of our targets were hit there. Last week, I had 3 different counts going on. I've just taken it to the bullish count right now, and then we'll look for a invalidation of that, just to kind of keep it from being too confusing for people. Sometimes newer traders, or at least newer to Elliott Wave, can get confused by the multiple counts. So I wanted to put it up there anyway for everybody that wanted to follow those counts. But we've had this movement here which just went sideways and kind of threw them off a bit anyway. But what I've got right now, if the bottom is in here, if it is in, I've got like a 1-2 and then a 1-2 and then this should be a 1-2, 3, 4, 5 heading up. So all we're looking at here is, does it break above the red or does it break down below the purple? If it breaks down the purple, that looks like we've got 3 waves up then. So if it breaks down, that should lock that in as 3 waves, which is corrective, which would suggest then this is a 1 down here and this is a 2 up here, and we're heading down again toward a minimum 23,000 kind of area, maybe lower, okay? If, however, instead of breaking down below the purple line here, it breaks up through the swing high above the just above the 1 hour and 4 hour pivot here, if we can get above that, then that keeps this bullish count alive. And so at that point, we look for a parentheses 3 target up here at about 38,298 and 20 cents. That's the 1618 extension of wave 1 here. So that's kind of what we're looking at, guys. It's really that range right there. For breakdown below the purple, it should lock in the fact that this is corrective here. We lose wave 2 here. We're heading down lower there. And that's just kind of the way it is, right? And so, I know a lot of people get upset if it's going down, but the reality of it is, guys, if you're trading, you don't care about the direction. You don't care about all that stuff. What you care about is volatility. You care about is it moving? If it's moving, you can trade it. That's what it is. And it's just about trading in the direction of whatever trend on whatever time frame you're trading. I think it's where most of y'all get caught up. You're thinking about the bigger picture, but looking at the very small time frame. And the very small time frame can be doing something locally different from the much larger time frame, right? Because it's just interior. So if you're thinking long term, if you're thinking large time frame, but you're looking at that short time frame, it's likely to get you caught. So don't do that. Don't do that. Make sure you trade the time frame that you're looking at, no matter what it is. Because if you do anything else, like I said, there you're going to get caught many times, more so than not. Let me see here. Rain, what's that? You're from Oregon? I got some friends who just moved up to Oregon a few months back. So, yeah, from here, from the Dallas area, they moved up to Oregon. They're liking it up there. So, let me see here. What two price points, top and bottom, define that channel? Well, on your chart, Mr. Lamb, if you will look, you know I'm going to give you a hard time because you've been with us forever, man. Here on Kraken, the swing high up here, you're asking me to look with my bad eyes. The swing high up here is 35,113.40 cents. And the swing low here is 33,657.60 cents. And remember, guys, that's just for Kraken. So if you're using a different chart, make sure you just find this structure here, at the end on your chart there, and make sure you know whatever levels those are. You're not going to trade your levels that were on Kraken if you're trading, say, Coinbase, right? Because it's a different exchange. But, generally the prices stay around the same. So it's just that area right there and that area down there. Really, if you want to be bullish, really what you're going to want to see is an impulsive breakout above this pivot, this H1, H4 pivot here. And what do we mean by impulsive? I want to always remind you guys, what I mean by impulsive is you're looking for these larger candle spreads like this, going up through that, and you're looking for an expansion of volume or a spike of volume to take it up through it. You don't want to see it, kind of smaller candles and lower volume because that makes it real iffy, real sketchy. If you can get a nice impulsive breakout above that, though, it works out great. And that's what you want to look at. And then you just kind of want to see it remain, above it. Sometimes they'll spike, it'll spike up and it'll shoot right back down. So you want to see that impulsive breakout that stays above that pivot. If you can do that, because this went sideways, this didn't even drop through the pivot. This dropped down below the pivot, or before the pivot, and then the pivot hit right after. So really, it's a move in sideways between the pivot and the S1. Tested this S1 pivot as support. You can see nice large demand wick down here. It's gone up to the pivot, pulled back to the support area. So now we're looking for it continued advance above to remain bullish. So that's kind of how we're looking at that. Let me see. Let me see here. Ernest, what's up? He says, I've learned I may be better at range trading than trend trading, but getting better at both. Yeah, most people, and it happens sometimes. Most people end up having a real good knack for, trading that range. But for most people, the trend is just the easiest thing. You just get in there and go with it. It's where they, and most traders, guys, believe it or not, most of y'all, especially if you're new, it's not that you have problems with trends. You can figure out the trend. You have problems with your entries and your risk management and your stop losses. You get the trend right. You cause yourself to lose money with the way you place your stop losses and your lack of risk management, stuff like that. Or even if you do make money along the way, you'll usually lose it, and probably even more when it pulls back into that corrective move. And so, again, a lot of what we do at TWC is we work on entries and exits and stop losses and risk management. That's why the Wednesday series that we do for Tier 3 is so good. Lots of different techniques to get into a trend or to enter. And then, where do you put your stop loss? Rules-based strategies. Where do you put your take profit, all that kind of stuff. Really helps out a lot. So, yeah. Let me see here. Oh, let's see. So yeah, so I mean, this is really kind of what we're looking for. So again, if we break out above, this red here, we're looking up here, minimum 38,298 for that 3 of 3 here. If you want to know what this circle 3 target is, minimum, and it'll probably be higher than that if price does go up, if it does. But the minimum's up here around 43,151 or so. But by the way, that will take it above. Oops. Grab it. There we go. That, as you can see, will take it above this swing high here, which should lock in this as the bottom down here. So, just got to kind of watch that as it's continuing to go there. But again, if we're dropping down below the purple, this looks like that'll make it 3. It looks like we've got an A, an A, a B, and then 1, 2, 3, 4, 5. So it'd be an ABC. Otherwise, again, looking at a 1, 2, maybe a 1, 2 locally here. Now, the thing is, guys, I've talked about this before. The longer we're trending sideways here, the stronger and the further the breakout's going to be, whether it's up or down. You're building a cause over here, and that's giving you this extended period of sideways to build to move. So just be ready for that. Like I said, I've got 23 as a minimum target. But remember, if we measured it out all the way, it was going to get us down around 16,000 or something. There's the possibility for 12,000. It just depends on as it extends its move, if it's going down, where it's going to go to. For right now, I don't see any reason to be overly concerned about that. I think right now I'm thinking of it as a good buying opportunity if it does. But, things could change. It's like everything else in trading. Everything's good until new information comes in and changes it. So don't be afraid to change your mind, guys. Don't get hung up on this. Oh, I announced on Twitter that I was looking at this target and it's going the other way now, but I need to hold, my losing position, because otherwise people are going to make fun of me or something. Stop worrying about that, guys. I get so many DMs about that, and people are... y'all are really getting bent out of shape about that. Don't worry about it. Who cares what some idiot on social media says? Seriously. If anybody comes at you on social media with anything other than kind words, just block them, guys. It really is not worth your mental health to sit there and let them dictate how you should feel. It's ridiculous, guys. People are doing it just looking for attention. Most of them would not do it in real life. I think I said it before. There's that little meme thing going around that says the problem with today's people online is that they haven't been hit in the mouth for saying the things that they say, enough times. So, I'm old enough to remember before the internet, and if you had something nasty to say to somebody and you said it to them, you got popped. Online, everybody just kind of hides behind the keyboards and, talks big with their fake, names and their fake pictures, and it is what it is. Don't let that affect your trading, guys. At the end of the day, this is your money. If you go in there and things look one way, and as it's playing out, it changes to another, if there is clear evidence there that you are definitely wrong in what you're thinking, get the heck out, man. There is no reason to sit in that trade. I don't care what some Yahoo online says to you. Most of the people online aren't traders, guys. They lose money day in and day out. They're not trading. And I'm going to tell you what right now. If you lose money day in and day out and you're not working to better that, you're not a trader. You're just somebody throwing money in there and hoping, most likely. Okay? So, the mental health aspect of trading, again, most of the stuff I often talk about has to do with, the emotional and the mental side of it, the psychological side of trading. Because nobody, very few people actually talk about that. Most of these Yahoos you follow online don't have any clue about it. They don't know what they're talking about. They repeat these silly little sound bites because they think they make sense, but they don't really, they don't know what they're talking about. That's why we talk about this. So don't let anybody get in your head online, guys. If you need to get out of a situation, get out of it. Don't hold it because you're worried that somebody's going to say, oh, look at you, you're changing your mind or whatever. That's what it means to be a trader. I don't know how many times I can tell you guys that, but I'm going to keep saying it. Smile and nod, boys. Smile and nod. That's right. That's right. All right, guys? So I hope that's clear. That's one of the biggest things I've noticed with all the traders that talk to me, especially new traders online that send me messages or whatever. It has a lot to do with their fear of changing their mind. just because of what some idiot online is going to say to them. Don't worry about that, okay? Because the people that matter, you know, they're going to say the things that matter, and they're not going to be awful people about it, you know? And those that don't matter, well, guess what, guys? They don't matter. And if you don't know somebody online, they certainly don't matter, okay? All right. Data, what's up, man? You kind of missed the time when people started, stop talking and took care of the problem right away. It was a different time. It was a different time. Yeah, so anyway. All right, guys. So, you know, again, this is what we're doing Bitcoin. It's still sideways. I mean, we're just locally sideways, larger term sideways. You know, guys, we can keep zooming on out here and, you know, we're sideways. This is really still sideways, guys. Believe it or not. This is, you've got this swing low area down here at the bottom, and you've got this swing high area at the top. This is really sideways here since we broke into this area back at this year. This year, look at this. January 1st is when we kind of got into this area here. And all this has been, guys, okay? Now, if you look at your 4 hour here, oh, this is interesting. Let's see, what do we got here? 4 hour, we've got some hidden bullish divergence here. We've got lower lows on your 4 hour. If you're a larger time frame trader, we got higher lows here. Like I said, the other side of that is we also bouncing off the S1 pivot. If we can break out above that pivot and that swing high there, that's a pretty good sign locally that we may be good to go higher on that. So, you know, keep watching that. And we've got a lot of room here. We got a lot of room on the Stochh RSI here to still move up. I mean, it could still pull down lower as well, but, you know, there is that room for it to go up. It's not necessarily down and that's it. Let me see here. Daily. The daily, by the way, guys, the daily pivot now is within about $300, I believe, of the 4 hour pivot. It's about $300 higher here, $200 higher. I think that R4 or that H4 is somewhere right around 34,800 or so. And then we've got it right here on the daily at right around 35,000 and some change. But we do have some consolidation up against it is what it looks like. So we might see a pop out there. You know, right now the daily candle doesn't look too hot. But, you know, we've got the end of the day still to go, okay? So that's still another, you know, 8 hours away, another third of the day still. So don't worry about it too much. Claudio, what's up, man? Good to see you check in. Oh, man, y'all on the matters. So anyway, I mean, if we look at this, hopefully your eyes are catching this, guys. You know, you've got this area right here, right? See how you've got this right here where it breaks down? So you've got this support resistance area right around where that pivot is. So you got this here, and then you've got this here. So you're just you just want to get a breakout up back into this area, and then the next step's a breakout above it. Two-step process. Okay? You know, we're up here around the overbought area with the daily, but, you know, again, lots of room to go up here into that as well. Daily RSI is just there, just neutral, but it's, you know, it's coming off an advance. So, you know, it's been advancing here since around the, what is that, the 19th of May? So we're in an uptrend since the 19th of May, and we're right around neutral, just at the bottom of neutral right now. So, you know, there's stuff here that says, you know what, it could potentially continue heading up higher there. I guess what I'm trying to tell you guys, the same thing I continue to tell you, which is stop listening to people who guarantee the price is going up or down. There are no guarantees. Right now, it's just sideways, which is why we're looking at that. You know, is there evidence that it could potentially go up? And that's what we're finding, that it could, but we still need to see it following through. All right. Here's your weekly. Weekly, again, not doing much of anything. And we had a great weekly right here, but there's been no follow through yet. We need to see follow through. Okay. So we had this great weekly candle here back on the 21st of June, that week there. And we just kind of went sideways, pulling back a bit, but we want to see it kind of catch and head up. You can see we're pulling back right around these swing low areas here where this previous resistance is. Look at this. See right here, resistance, support, resistance, support. And that's kind of where we hit right here. So if we can hold this kind of area and continue up, again, these are things that you can look at and they give you more support for possibility of what you're looking at. In this case, if we're looking at it going up there. By the way, you'll notice that we're at the R1 pivot here. That's right above us here on the weekly. It's right around that 37,600 area. So again, everything else aside, getting above that's a good thing. But as it is with pivots, if you've got a swing high nearby, it's not good enough just to get above the pivot. You need to get above that swing high as well. And then that opens up not just a pivot here, but it opens up a move to this top here. So if we're breaking out above here and getting above this, what is this swing high right here? 41,341 area. If we can pop up above that, that opens us up to this up here, this kind of area right in here. So 58,000 to 60, almost 63,000. That's where I would expect to get if we pop up above that. This is all inconsequential right here. If we get above that, we should pop on up here. And to me, that means to me that we're headed up, that this is definitely the bottom here. We're headed up. Well, as definite as you can get, I guess. So you guys understand that? Just giving you different ways to look at this larger time frames, guys. Monthly. So what I want you to pay attention to on the monthly here, guys, is this right here. Spike of volume, large candle spread. This was May, okay? But then look at June. Almost as much volume, almost. And look at how tiny that candle spread is there. So you went from this candle spread, you can look right up here at this number. That tells you the size of the candle spread. $20,476. To this one, which was just $2,257. So basically, what is this? Probably 85% of the volume. And you got 1/10 of the result. 1/10, which means more effort, less result. And so that's a good sign if you're looking for it to reverse. That's what you want to see. You want to see there's more effort going into the volume there and less result getting the size of the candle spread. So bottom potentially printing out here. So we definitely want to see it pop up there. By the way, you can notice right here that 41,341.80 that I said we want to get above. That's last month's June swing high there. And again, popping up through there, you get the rest of the way up this candle, up into that 58 to 60, whatever it was, 63,000 area there. And then, of course, that should just take you off further up there. So, like I said, lots of possibility for it to continue up higher there, but we need to see it actually do it, guys. End of the day, we need to see it do it, okay? So we could just, what is this now? This is July, right? So you may not want to hear this, but we may spend the next month and a half even, gradually moving up here. It's sideways more and then kind of starting to move up here. So that may take a bit still. I'm not saying it's going to, but it may. I mean, look at this. Look at all this sideways here since the 19th of May, right? Month and a half, just sideways right there. It could take a month and a half just to get back up there. So don't trade because you're bored. Don't trade because you've got fear of missing out. But, zoom in there and find your trades, guys. Look for the higher confidence entries. All right? Look at this right here. Look at this. If you were watching this in the 1 hour, I guess we could probably do in the 4 hour here. Maybe not. Well, here we go. Again, lower lows off there. And higher lows right here. That you should have gone long. That's a hidden bullish divergence. Doesn't guarantee it's going to go up, but you should be able to get something, and that's your higher confidence entry right there. You're not entering just because. You're entering because there's a higher probability chance that you got that hidden bullish divergence. And you should have a target of at least your pivot. Why your pivot? Because that's your big thing sitting right there in front of you, holding you back. Okay? So anyway, that's what we're looking at. If you want to go up, that's what you're looking at, guys. But again, if we lose that purple line right there, that's a good indication we're probably headed lower. We need to lose the wave 2 right here at the S1 pivot, basically at the S1 pivot on the 1 hour. And then especially if we lose this wave 2 over here at 32, what is that? 32,717. Oh, by the way, if we lose this and we continue down here through this wave 2, basically below the 1 hour S1 pivot here, that would say that this is likely 1, 2, and that would give us a minimum 3 down here of 30,498.50. Almost forgot to tell you guys that. All right. Am I trading Bitcoin at the moment? Not at the moment. I'm adding in every day. I've got money that goes in every day for Bitcoin. So that goes in regardless right now. I'm not really actively trading it at the moment, though. Most of my time has been spent trading FX right now because that's where the money's been. It's been easy money. So yeah. But I do have buys going in I guess probably just about every day now. For Bitcoin. So, because my belief is even if we're coming down, I don't think it's the end of Bitcoin or anything. So, longer time frame on that particular type of entries coming in. Yeah, it's not trading though. No, not trading at the moment. It just doesn't make a lot of sense. Especially now with Kraken not allowing, leverage trading anymore and all that. It's just I don't know. You make a lot more money. I'm making a lot more money with FX at the moment. So yeah. Am I shorting Spire Arc? Not at the moment. I think we probably got some further upside. Let me look at DXY here real quick, and then, well, you know what? No, let's go ahead and jump there real quick. We'll look at the thing here. Let me see here. We've got, where is it? All right, let's look at, see if I can get the chart pulled up here. NASDAQ. Let's see what we got in the NASDAQ. All right. There we go. So right now, NASDAQ, as far as the still buying Bitcoin goes, I mean, really, guys, I keep talking to you about there's a difference between investing and trading. And I myself, I have an investment portfolio and a trading portfolio. And so, I don't treat my investing portfolio the same as the trading because it's two different things, right? My investing's longer time frame. And that's when I started buying in there, January of 2017, right around $1,100, $1,200 for Bitcoin. Didn't take anything out of it in 2017 at the top there, even though, we called it coming in because, there just was no reason to. What if we were wrong, right? I mean, this investing's meant to go for the long ride. And so, so that keeps getting added into. Trading's trading. So, yeah. Yeah, exactly. Investment just kind of sits. I pay attention to it, but I don't, nothing like freaks me out to sell it or anything. My worst case scenario with my investment is that I'll get out where I entered overall. And I'm not really too worried about it. So the way I've got it set up at the moment, not like get out at where I entered the first time, but averaged in and everything. So, yeah. So, as we got NASDAQ here, again, trying to work this as it's moving. I've got this right now potentially as a 1-2, and I got a 3 here, which we may be coming up on. So at this point, I've got this 3, 4, and then this 5, potentially a 5 here. We got to do this. Yeah, potentially a 5, or this is like a 1. Let's see here, 1, 2, 3, 4, and then we'll get a 5 from here, which finishes up just a bit higher. So either this 5 of 3 here has been done, or this is the interior 4 of this 5, and so we've still got 5 up here toward this 14,697, the R1 pivot, that area right there. In which case, then we'd see this 3 come on back down, and then head up higher there. So, I mean, I think we've still got some further upside on it. Daily, Daily says, yeah, we've got a little bit longer, a little bit further we can go on that. Don't pay attention to this at the moment. I've just got this over to the side. So, just kind of put that over there. Now, as for today, right now, this is interesting. We do have an outside bar today. So, this could be a reversal setting up, into like I said, this be the bigger 3-4 here. And so, if it is, if that 3 is in there, I mean, we're just kind of looking at this right here, right? And so I think it would be, I don't think it would do the 38.2 because that's going to take it below the pivot. So I think maybe we just get like this 23.6 area right here above the pivot in the range. So if 3 is done here, then 4 would just be right in this area, and then we'd have 5, you know, coming back up there higher. Because if this drops down in here, this would have to be an ending diagonal, which means this has to be an ABC if this is going to be 3. So, you know, this would be like an ABC here for 1, which we have. You know, we've got a possibility here. I've got a possibility written on here. And then you'd be looking at something like a 1, 2, 3, 4, 5, maybe gives you A, B, and then 1, 2, 3, 4, 5 gives you C, right? So you've got your ABC for 1, 2, and then you got your ABC for 3, 4, and then you have an ABC for 5 up there. And so in that case, of course, yeah, you'd be looking something like that as far as the ending diagonal goes. Something like that. And with that, you'd probably end up getting an up thrust out of here, and then if it is, you know, it should drop strongly right back in. So we're going to see how this plays out today to see if this is the interior 4 of 5, or if this is 3 completed, we'll have 4 further back. But either way, we should still have some further upside, I believe, with the NASDAQ still. Let's see if we can get some catch right here. I mean, we filled in. We've technically filled in this gap right here. And it's, you know, wicking back up to get it back above the pivot. So definitely want to see how it finishes out today. Let me see here. Why does the Doge price have a huge difference on HIP BTC and any other exchange? I haven't looked for discrepancies in prices, but you know, it has to do overall with you know, the demand and supply on that particular exchange. It shouldn't have anything huge. If it does, there might be something else going on there. And yeah, like Telluride saying, HIP BTC is kind of a sketchy exchange. I'm not a fan of it myself. So yeah, there could be any number of things going on there with it to do that. Yeah. So anyway, so there's NASDAQ. E-minis. What are E-minis looking like? So this is the SPX here, E-minis. And with this one, I'm looking at the possibility of this being a 3-4 here. And then in which case we would have... okay, so what I'm looking at, this is either a 3, 4, 5, give us a 3 and a 4 and then a 5 up here. So this would be, you know, this wave parentheses 4. It's right here at the 23.6. Could continue to come down here, but then looking for the move up here to finish off this higher wave 3 here, up there around that R2 pivot. Or this is like a 1, 2, 3, 4, 5. So then this 3 would actually finish right over here at about 43.59, 75. And so that 3 would be there, and then this 4 would be over here because this is interior, and then we'd have a 5 up here around 44.14. If it continues dropping down below this wave 4 over here, then we got to relook at the count. So this is, what is this here? $4,269.25 is what that is. So if we're dropping below that, then I'm going to look at a different count with what's going on there. Sorry guys, I was cool earlier, so I'm wearing my pullover here as you can see, and turn on the fan now. It's getting a little warm. Let me see here. Yeah, man, you know, HIP BTC, yeah. Generally, guys, your exchanges, they're not gonna ever be exact, but they should be around the same point. Now you'll see sometimes, you know, with Bitcoin, like you'll see that there might be a few $100 discrepancy, and it gets like that occasionally when there's a lot of selling, you know, of one side going on. It depends on the exchange because some exchanges have more professional traders, larger accounts, so it has a larger effect, you know, on that exchange. But generally, your exchanges should be around the same. So if you see any kind of really, really large discrepancy, be concerned about the exchange that has the large discrepancy. If everybody else is kind of like right here with your price, and you got some large discrepancy up here with another one, stay away from this one. Yeah. Because all these algos that are used by these exchanges, they all kind of work together to kind of keep price, right around the same area. So you've got, everybody talks about market makers as if they're out there making money buying and selling. Market makers don't do that, guys. You have to understand. There's so much bad information online. Your market makers, all they do is provide liquidity, okay? That's all they do. They make it so you can get out, hopefully, where you want to get out or get in where you want to get in. Because there isn't always an order anywhere nearby. So they provide the liquidity. And so they're not trying to make money, buying and selling. They're just trying to get in and get out as fast as possible, because the longer they hold their position, the more likely they're going to lose. Because there is no, oh, I'm going to buy here because at this point it's going to validate this other move. No, it's just we're providing liquidity right here. And then they get paid by the exchange or the broker, depending on, what you're trading, to provide that liquidity. They get paid. That's where they make their money. So get out. If you guys are listening to the Yahoos online talking about, oh, the market makers doing this and that, stop listening to them. Market makers provide liquidity. They put cash there so you can get in and out of your positions. Because if they don't, it doesn't run as smoothly. You might have to go much further. There's a huge bit of slippage you might have to take all the time when you're trading. Okay? So that's the idea there with the market makers and whatnot. So they all run these algorithms that take the buying and selling, and they provide that liquidity, but they do it where they try and keep the price around some index of price, which is based on other exchanges. So that's how it's all working together. So again, if you get this real large discrepancy with a single exchange or whatever, stay away from that one. Don't use it. It'll lose you money, most likely. But anyway, yeah, so again, right here where we're right around the pivot here, looking for it to take off. If, however, it continues going down here, then it gets interesting because you've got a 1, 2, potentially 3 here, right? ABC. But if you get a break up and then down, now you got 5 down. So then you 3 up and you have to go 5 more down, right? So you want to watch that wave 4 swing low over there that we talked about. As long as it's staying above that and continues up, then we're looking at kind of one of these two ideas here. Let me see here. So, those are two, you can see how they're different, right? The NASDAQ and the SPX. And then you get the Dow Jones. And as I continue to talk about the Dow Jones, it's just this broader based index, right? And so once again, it's dropped down with everybody else here on, the DXY popping up this morning. But here's the thing. So we've got this count. I've updated this count because we're so close to invalidating this as a 1, 2. I had this as this is a 5, and this is a 1, 2, 1, 2. But we are so close. This right here, this 34,849.32. If we get above that, that invalidates that bearish count, and it leaves this bullish count here. So now we got to see it. Now, right now, this count here, I've got, possibly 1, 2, 3, 4, and a 5 up here. Minimum target of 34,928.44. And then a secondary target potentially here of 35,109.29. So either one of those targets, if we're popping above this, this morning's swing high here, then that will invalidate the bearish count, and it leaves this bullish count intact. And this gives us, working on wave 5 here. So this would be like more. If we get to the second one, it takes us right above wave 3 here. And if we do that in 5 waves, then that's done the minimum it needs to be a wave 5. But realistically, we'll probably be looking at it as a 1 of wave 5. So sub wave 1, we'll have a 2, 3, 4, 5 to finish out wave 5 doing that. But you can see the difference in where we are here. We still haven't made a new high, which is back over here, the all-time high, compared to the other two, which have already made their all-time highs. So yeah. Let me see here. Cody, what's going on, man? He says, Amazon and Apple upthrust after distribution today, or was the past year of sideways action accumulation for a monster move higher? I don't know. Let's see here. Kimosabe, yes, I am sure about that. Market maker is a job. It is to provide liquidity. Yes, I know you guys want to believe something different, but you're wrong. And I don't mean that to be rude. I just mean that yes, market maker is a job. You get paid by the exchange to do it. Because think about it. Just think, guys, for a minute. If you're a market maker, you're providing liquidity at any point it's needed. Okay? You're not saying, oh, well, technically we should buy or sell here or there. You're not. You're providing liquidity when it's needed. That's what your algorithms do. That's what they do with the exchange. If somebody's trying to get into a position or out of a position and there's no liquidity there or not enough liquidity, that's what it does. It automatically uses your funds to add liquidity. So you're taking positions constantly without regard to where you are technically. The job is to get in and get out as soon as possible so that you're not holding on to the position, because the longer you're holding on to the position, the more likely you are to lose money. And since you're not doing anything technically, you could be in a lot of losing positions trying to hold it, right? So it makes no sense as a market maker to try and also make money that other way. There's no technical analysis to it. There's nothing technical going on when you enter or exit the market. You're just providing liquidity when it's needed. Because in any exchange, whether it's equities, FX, whatever, you don't always have a corresponding other side to your trade. And if you don't, you can't get in. You have to wait. And if you have to wait, you're likely not to use that exchange, right? If you're going in there and you can't get in and out when, more or less when you want to get in or out, you're not going to be using that, right? So the goal, the exchange or the broker hires these market makers to provide that liquidity so that you can get in and out on it. All right, guys? So just think about that. Because remember, again, they're taking lots of positions constantly. So if they're taking positions right before price sails higher, all of a sudden you've got a whole ton of money that could be at risk if you're short and price pops out, or if you're long and price pops short, right? And then you can't be. So yeah. So anyway, yes, this is kind of where we're at here. Now you're talking, let's see, Cody, you were talking about Apple and what? Amazon and Apple? I don't even know. Let me see here. See if I got any charts from any time recently. Yeah, not too recent. Let's see. Haven't looked at this in forever. Let's see, where are we here? Okay, we were looking at a possible top here. Let's see here. Have we hit that, or are we still... Is this just a deep 2? Let me see. This is Apple. I've got what there? I've got 144.63, and what do we have today? 143.15. So, I mean, we would have to move this over here. Well, let me do this. Because I don't change my charts, guys. By the way, if you're not in TWC, you may not know this, but I don't change my charts. I just add new charts, so they're always there. There's nothing for me to hide. When you're wrong, you're wrong, That's part of being a trader. And I want our people that are with us to always understand that. But it also helps them see the thought process when we're looking at it here. Let's see here. So I was looking at, let's see this, man. See, if I look at this, it looks like 1, 2, 3, 4, 5 here. It looks like 5. And then 1, 2, 3, 4, 5 gives us an A. Let me kind of change these around a little bit here. And then ABC is a B. And then what do we got here? 1, 2, and then 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5 here maybe is a C. Just a deep retrace right there, maybe. Let's see here. We've got volume dropping off. We've got volume on the bottom. A little bit on the top. Looks more like this might be a continuation up here. So how would this work then? Maybe this might be a 1, 2, 3, 4, 5. So A and then B and then C here. We're retracing right there at what? I saw that other stuff. Let me get this done here real quick. we really topped out on this daily. If this is a 1-2 here, we've got a 3 down here at 96 right here at that high volume node area, which makes sense. Make sure I just have my settings right on this. Yeah. And they give us a 5 down here, so they give us an A right around 86. If it's going to. Let me see here. So you'd have your preliminary supply right here, buying climax, and this is gonna be a selling climax, automatic reaction. This volume's staying pretty high in here. So I don't know. If I'm looking at this, I'm thinking it may still be too early to tell, unless this is just it right here. But this is weird having all this volume up here. If it's accumulation or reaccumulation, overall your volume should continue to go down. But you see it kind of hits here, and then it all stays here. All these spikes here all along the way, right? So, that would make it seem more like distribution. But again, this would still be phase B here. And so if this is going to be an upthrust, after distribution, it should head above this swing high here. It's not going to be below. It's going to be above, because this is your upthrust. So upthrust after distribution would have to go above it. Otherwise, if this is distribution, this would just be, potentially a last point of supply kind of area sitting there, because it's below that. But this could all still be phase B as well. There's not enough time put into this yet on that. So yeah, if yields keep dropping, the insurance scene is a good for tech. No, I don't know what you guys are talking about there. Trying to catch up with you on. I just walked into something. Yeah, Kimosabi, there is no side hustle if you're a market maker. Again, you're risking. You are risking without much return, without much of a chance of return. And if you lose your money, you can't do your job anymore. You're out. So there's no side hustle with market makers. Okay? You guys have to understand. I think when people argue that maybe there might be, I think it's because they don't understand exactly what market makers are doing, or exactly how much, if they weren't there, how different your trading experience would be, how many times you would likely not be able to get in or get out where you want to. I think that's the misunderstanding. But again, it's all over crypto Twitter, as I'm sure you know, right? Which is why you're asking me, right? And again, it's crypto Twitter is just a bunch of misunderstandings and not knowings out there. It really is. But yeah, it makes absolutely no sense as a market maker to try and make money on those, because you are indiscriminately buying and selling. There is no analysis at all. There is no, we're going to wait till here or wait till there. You're buying wherever. You're selling wherever where liquidity is needed. And, the idea of what you're doing is that you're making more money than what you may be losing there with what the exchange is paying you to do it. Okay? Yeah. So, again, guys, there's just so much misinformation. This is what I keep telling you guys. You can learn how to trade online. You definitely can with all the free information out there. But the problem is, as new traders, you don't know what you don't know. So if you don't know what you don't know, the thing is you're going to come up to a lot of things that sound like they make sense, and they really don't. You learn to find out if you're in trading for any period of time that it doesn't make sense. And so there's a lot of money that you have to pay. A lot of money that you have to pay in lost trades, lost profits and whatever. Not only just the money that you lose taking the wrong side of a trade, but the money that you lose, the opportunity cost, where you're losing money along the way because you should have been in a different position, or you shouldn't have been in that position, or you should have been in, So there's a lot of money left in that. And so, you're going to lose. You're going to waste a lot of money trying to learn that way. but it can be done. But that's why, some people choose to go to somebody like myself, where we can kind of tell you, listen, here's the reality of it. We've been doing this 25 plus years. Here's the reality of what's going on. And, here's the things you have to watch out for that you're likely to come across. And if I don't tell you this, you're probably going to make that mistake. And I think that's where the trade-off comes in what you pay somebody maybe to tell you those types of things and just doing it yourself. Because if you're doing it yourself, you're going to make those mistakes. And you're going to, a lot of times, because you don't understand risk management or whatever properly and all that, you're going to end up just wasting a lot more money than not for that. So yeah. All right, man. Well, listen, I'm not gonna argue with you, man. I told you the way it is. If you don't want to believe me, it is what it is. Okay. That's for you to figure out what you want to believe. Okay. But there's a difference, guys, just so you understand, in case this is the hanging point. There is a difference between market makers and large professional traders. Those are two different things. So what you see in the charts in your volume and price action are your large traders, not your market makers. Okay? Your market makers aren't always with big positions. They're just providing liquidity. If it's a little bit here or a lot there, it's whatever. Your professional traders are the ones that we look for with Wyckoff analysis in your volume and price action. They're the ones that you see. Okay? But anyway, let's see here. So there's Apple. So, obviously if we're breaking out above that swing high, which we're really pretty close to, that'll suggest that we've got, this is a 1-2 here, in which case then 1, 2, 3, 4, 5 comes back. Actually, you know what? Let me see here. There's, let's see, we've got a 1-2 here. So that gives us the 1, 6, 1, 8 right there. And I'm looking at this maybe like a 1, 2, 3, 4, 5 here. This could be, no, see, that wouldn't be it. No, it's got to be, never mind. If this was an ending diagonal, this would have to be an ABC. ABC and then ABC. Because I was looking at maybe like a 1, 2, 3, 4, and then 5. But 4 drops into 1, so it has to be a diagonal. So the only two diagonals it could be is an ending diagonal, which would be for wave 5. So in that case, it would have to be an ABC. So it'd be ABC for 1, 2, ABC for 3, 4, and then ABC for 5. But it could be, if it's a leading diagonal for wave 5 to begin with, so wave 1, 2, 3, 4, 5 here, and that gives us a wave 1 of 5. I'm not sure how I like that, though. One, 2, 3, 4, 5. Yeah, see, if I look at this, I go 1, 2. 1, 2, 3, 4, 5. So it gives us a 1, 2, 3, 4, 5. So it could be an ABC as 1. And this is 2. And then A, B, 1, 2, 3, 4, 5. Look for 3, 4, and then 5. So then we're looking up here probably around this 172 if this is A, B, C for 1, 2, A, B, C for 3, 4, and A, B, C for 5. At least up there around 172 probably to finish this off as a wave 5 ending diagonal. But I think we can get an ABC out of that. Just again, looking at 1, 2, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. So yeah, good look at that. Let's see here. Let's see. So there's Apple, and you were talking about Amazon as well. Let's see here. Oops. I can't do it. There we go. 414 was the last time I looked at this. So I have this as a triangle popping out here with Amazon. Oh, maybe. Wait a minute. Let me see here. Nope. This was a month later. I did this in 4-4, so it was back over in this area. But as you can see, this broke out above here. So you had a swing high here of 34.9624, and then over here 35.54. So yeah, that doesn't work out there. Let me see here. A, B, C. Yeah, I don't think so. I think this is just an ABC. I don't know. That's even less there. That'd have to be an ABC here. All right, let me kind of make a new chart here real quick. But either way, it should be on wave. I think I've got 5 of 3 possibly right now. So, you know, again, if Amazon's doing this, then Apple should be heading up as well. You know, big tech names should be kind of following each other right along there as it's going. Let me see here. So let me go ahead and just change this from what we had. So when I set this up, guys, for like for our members, what I'll do is I'll say, okay, well, here's the target based on this. But if, like we're doing the triangle here, if we get that breakout prior to it, you know, above wave B or below wave A there, then that invalidates the count, and then we're looking at this other target. So that's usually the way that works. In case you were wondering, let me see here. Actually, you know what? Let me just go ahead and make this, let's see, 2881, 2871. Yeah, that's fine. Well, I mean, this could be like an A, B, C, D, E maybe. Let me zoom in here, but this is the weekly. This is the weekly. A, B, C, see here, D, E. I mean, so yeah, I mean, we could still do that. There's a triangle here. Just look at it like this. A, B, C, D, and E on that. Just put this the right way with the, with everything it was here. Because I was looking at that weekly with the other one, but yeah, you know. Just got to do it like that. Let me get this here. So if this is the case, then what we have here is your pattern targets based on the widest part of the triangle. You put it there, wave E, where it ends. My eyes are kind of not so great as I've been telling you. Looks like right about there or so. So that almost gets you up there. So then we have to look at, okay, well, what do we have here? And so let's see. Is that a swing high there? 34, 35, 93, 34, 32. So potentially 1, 2, 3, 4, 5. And then the question is, you know, is this a 3 down, 3 up, and 5 down here to give you like an expanded flat? So you get, you know, your 1, 2 here. And then off here you've got 1, 2, 3, 4. Looks like 1, 2, maybe 3, 4, 5 still. 3, 4, 5. So we're working on 5 here, probably up toward the R2 pivot here, which will fill in, it'll reach that target. But then you have this here, so it'd be a 1, 2, 3, 4, and head up 5 higher. That's the case. So let's see here. So 1, 2, 3, 4. See, it's already above the minimum 61.8 right there to get it. So overextension there. The daily, we've got room to go here, but we're getting up high here and overbought. What does that weekly look like again? Weekly, we've got overall higher highs. Lower highs here. We're up into overbought. Yeah, I think we're probably closer to wave 5 of 3 than we're not. The R1 pivot here on the weekly is up there at 39.97. You can see we moved in sideways between the pivot and the R1. Kind of pulled back toward the pivot. Hit this support area here, took off. But, let me see here. Yeah, I think that might be a triangle there. There's a lot of overlap here. It looks like a lot of threes, which gets us to there, which then makes this a 1. Expanded flat as a 2. Then 1, 2, 3, 4, 5 we're working on. So 1, 2, working on a 3 there. Should have a target up here around 38.25. Would give us a 3. And look at that. The 5 gets you right up there at the R5 pivot. So I think overall we may be heading up there to that 4,000 area for Amazon, it looks like. And that'll get you 3 done. 4 will come back down toward this low area here. You know, this 3,000 area. And then find the support in the same area here where this 4 is. And then 5 will pop up a bit higher there. Which would, you know, give us through the end of the year still to work with it. Makes sense, right? Let me see here. Just kind of catch up with you guys here. Yeah, so I mean, you know, again, it looks like Amazon and Apple still have some further upside to them. So as long as big tech still has some upside to it, these big techs like this, you know, overall Nasdaq will probably have some more upside, and of course the S&P, because the S&P is heavy. It's not as heavy, you know. Nasdaq is really heavy tech, and then S&P is not as heavy tech, but it's still heavier. You know, than what you have with the Dow Jones, which is very broad based, as I keep telling you. So you know, I think this signals we probably have some further up, unless you know, unless we get a breakdown here. If we get a break back down, I'll tell you what, on Amazon on the weekly here, if we're dropping below that that weekly pivot, I think that says the top's probably in at that point. We'll come back and reset the chart a little bit, kind of, you know, recount it some more. Kind of zoom out here to the monthly. I mean, that's kind of what I'm looking at the moment on Amazon. Let me see here. Though looking at the monthly, this could be a 1, 2, and then 1, 2, 3, 4, 5. So 1, 2, and then 3, 4. And then 1, 2, 3, 4, 1, 2, 3, 4, 5. So yeah, I'm going to watch that. That's the other count I'm looking at right now. It would suggest that we may be looking at something like this here. So we've got our 1, 2, and then we've got maybe a 1, 2 here, and then this is a 3, 4, and then this is 5. So let me just kind of write this in here. Let's see, if we did 1, 2, and then 3, 4, 1, 2, 3, 4, and then yeah, 2, 3, 4, 5. Could potentially be something like this here, which then just gives us this larger, whoops, this larger 1, 2. Right here. Very short pullback on that 4 there. But then 1, 2, 3, 4, working on 5 up here to finish out. So, I mean, big picture is, do we lose the weekly, monthly pivot there? If we lose that, I think the black count's in play. It says 5 done. We're coming down. As long as we bounce above that and continue up higher there, I think there's still a chance for that red one, the red count to still play out that we've got on there. So, yeah. But again, it all hinges on what's doing up here with the pivot, because this right here suggests on this larger time frame that this could just be a 1, 2, 3, 4, 5. So I'll go ahead and draw that in there. 1, 2, 3, 4, and then 5 here. Whoops. Yeah, just so you guys got a visual of what I'm looking at there. And then other than that, this out here kind of more or less follows out with it there. Other than right here again where we'd be, looking at a 1, 2, 3, 4 probably, or 3, 4 with the triangle here. Maybe even, and then 5 up. Not a triangle, I'm sorry, triangle's up here. So 1, 2, 3, 4, 5 going up there. Hey, no worries, Kimozabe. I appreciate it. Thank you for the tip there. Yeah, no. Like I said, market maker is a job. And if they're trying to do anything else, no matter what they're telling you, it's too risky to try and hold on to positions as a market maker. Because you're just buying and selling indiscriminately. You're just providing liquidity when it's needed. So, that's the whole thing on that. Let me see here. Anyway, yeah, so there we go. I mean, like I said, so either way, I think we've probably still got a little bit further upside, at least for both of them. So just be watching here. I think the bigger, at this point, guys, here's the thing. As we continue to do, we continue to, change our counts and expand the count here as price pushes higher on these, on the indexes, on the stock indexes, and then some of these higher, these longer time frame trades here. But here's the thing. As you get up here, you really have to start zooming out and looking at where are your major areas on your larger time frames here. And so again, on the monthly here on Amazon, you've got your 1, 2, 3, 4, 5. So you're looking for the breakdown on the larger time frame of the pivot. If you get that breakdown of that monthly pivot, that should be your first clue that says, you know what, you're probably the top's in. But you need to get beyond, again, your wave 4 here. Right down here at 1307 to really kind of confirm that. But then again, you got a long way to go kind of down that afterward. So yeah. So yeah. Oil doing some crazy stuff today. Not really crazy. Have I ever had a segment describing the role of MMs in general? No, not. I haven't ever done anything like that. I've talked about it multiple times. Discussed it. Basically, what I've said here. Basically, market makers, guys. Holy jeez, look at oil, man. Oil just really tanking today. Sorry, it's more than what it was earlier. It's not looking so good now. Yeah, so market makers. Anyway, so here's the deal, guys. When you go to trade, in order to trade, you have to have somebody on the other side of your position. If you want to buy, you have to have somebody selling. If you want to sell, you have to have somebody buying. If you don't have that other side of your trade, you can't do it. So the thing is, trading is not efficient, okay? And so not everybody's going to want to, and many times there's not enough orders for everybody that wants to buy around a certain level or everybody wants to sell around a certain level. And so brokers and exchanges, whatever, they employ what are called market makers, which are just people that have, I can't say just, but what makes a market maker is somebody that has a lot of capital, and then they have they have the algorithm that they have, which works with the other exchanges and works off the indexes to kind of keep the prices around the same, right? And so what they do is they provide that liquidity, because otherwise you're going to have some exchanges with really, really astronomically different prices than other exchanges consistently, right? And so, so what these market makers do is they provide that liquidity. So number one, so you can get in and out of your trades around the area that you want to without having to get a whole bunch of slippage, right? And number two is they provide liquidity to kind of keep price around that index of those other exchanges. And that's how all your prices stay together across your multiple exchanges. Okay? So you've got an index of other exchange prices And then if you have a substantial buy or sell on your exchange that would kick it beyond the other indexes there, you're providing liquidity to stop or to push it. So the prices kind of stay around the same. And that's kind of around that index price. And that's more or less how they work. So they just provide the liquidity on there for you to get in out of your trades, and then attempt to kind of keep those prices around that index price. Which is why, again, if you think about it, that's why the prices are going to be a bit different. Yes. For the most part, they're agnostic on price direction, except in the case where your exchange, let's say the index is rising and your exchange is lagging and it's not catching up. They'll help to move that price in the direction, or along the lines of that index. That way they keep all the prices together. Otherwise, there's huge arbitrage opportunities across the multiple exchanges. And then people are losing money doing that, in the exchange with that. Exchanges don't like that arbitrage stuff. If you're in FX, your brokers don't like that arbitrage. So they do everything they can, their market makers do everything they can to keep that arbitrage from really kicking in. But they don't say, oh, wow, I'm going to buy, somebody's selling, so I'm going to buy all those orders and then I'm going to sell it way up here. That's not what they're doing. No. Because where they're buying is they're not like, oh, I'm going to wait till it gets to this point to say it's going to go there. They're just buying, where that liquidity is needed if the sell side needs it. Or the other way around. Yeah. But generally, yeah, they themselves, they're agnostic on price direction, other than keeping the index or keeping the exchange's price in line with that index. Yeah. But even that's not them being anything other than agnostic with price direction. Yeah. Because again, what happens is then you'll get an exchange where there's a whole bunch of selling, which is different from the index of the other 4 or 5 exchanges, which maybe has price going the other way, right? But just because you have some large seller on that one exchange, and you don't want that going on. Yeah. Because that causes, again, a whole bunch of arbitrage opportunity. And of course, if your exchange or your broker is not in line with the index, people aren't going to be on that. People are not going to be trading it because it's going off the rails. It's not with everybody else. And so you're going to lose business. That's why you don't allow these exchanges to get all wonky out of the same area there. Yeah. So anyway, oil, man, check out oil here coming on down. So now we're looking at this. This is getting kind of interesting now. I've got this here as working on this wave 5, and this morning I had this as 5 up, but then we had this big pullback, which went below. So I've got this now as ABC 1, 2, ABC. This may be ABC 3, and then 4, and then maybe even AB 1, 2, 3, 4, 5, C here. So we might actually be seeing this as 3, and then 5 here. But in order for that to be, price is going to have to drop here below wave 2. So we're getting down there, but we're pretty well oversold here. It's a lot of volume coming in on this drop over here. So if we drop here, if oil drops below, what is this, wave 2 here? What is that, right around 72? Around 71.97 or so. That should say that if this count is right up to this point, then that should be, 1, 2, 3, 4, 5. Here's an ending diagonal. Looking something like this. And then, and in that case, look at that. Look at this great move up here in this channel here. It's been crazy. Let's see. And then, so that would give us then, because I've got this as a W up here. And there's still a possibility this may not be right, but I've got this as a 3 with an A down here, and then a WXY for a A, and then B, and then C heading up for wave 4. It might really be extending on that. But nonetheless, if this, for what we're going to here, if this is the top, then we're looking for B to come to a minimum here of about this $70.70 kind of area. And then secondary test right here at the 68.85 kind of thing. And that's what we're going to look for. And then we'll have a wave B, a wave C of Y of B. Maybe a bit higher depending on where this ends. Again, depending on if this is 4 and we got 5 coming up, or if this is 5 right here and coming down. We just need to see a breakdown below wave 2 there. But it has broken down below the ascending channel support. So that's kind of your first clue that top may be in. You just need to see if you get some finish and follow through then further down here. But, coming off that May low off of last year, this... See, we've got 1, 2... This looks like... I guess this could be maybe like an AB and then 1, 2, 3, 4, 5. So you can get an ABC here. So the other possibility is that this could be 4 here, and we're working up, in which case we've got 1, 2, and maybe a 3, and working on a 4, and then a 5 still coming up. So it's really going to depend on what happens here, if it comes down, or if it moves up higher as we expect to wave 5 and then comes down. And then we can work that out some more. We kind of zoom out a little bit here. What's this on the daily? So big picture is we've popped above. Looks like we've got above that. Let me see here. That previous swing high from the other year. Oh, I cannot see. Yeah, so we've got 76.98 here as a high so far. Right here. And that should have taken out, let me see here. This was the previous swing high here back in 2018. 76.90. So what did I say this one was? 76.98, yeah. So that's up higher than 8% then. So again, this was that negative 40 or so on that swing low here in May of last year. Way down here. And at one point they were paying what? They were paying people... I can't get in there. At one point, there we go. They were paying people $40.32 a barrel to take it off their hands. Because remember, this is WTI here. It's West Texas Intermediate. This is not Brent C. Brent C, you can take payment in fiat, or you can take acceptance of the oil. Here with WTI, if you're holding the contract at the end, you have to, where you're going to take the oil. You have to take it. You can't just say, oh, I'm just going to, take cash. They can't just pay. You got it. It's deliverable. Unlike Brent C, which is, you can settle in cash. You settle in oil here. You do it. So that's where a lot of people got caught on that big drop there. A lot of people getting in, they had no clue what they were doing, and they got stuck with oil there at the end that they had to get out. So, and then of course at the time, worldwide storage was around 80% full worldwide. Cushing, Oklahoma here is the main hub in the U.S. for WTI. By the way, in the U.S., oil is moved around through pipelines. Again, unlike, Brent C, which is pulled up and put on tankers, so it's already sitting on tankers. Here in the U.S., it's sent through pipelines. And Cushing, Oklahoma is the main area, the hub, and that was full. It was already, everybody's paid for. So there was nowhere that people that had oil could store it there at Cushing. They had to find, if they couldn't find somebody to pay to take it off their hands, they had to find some way to take that oil out of there. You know, trucks taking it to barges and, you know, setting it out in the ocean for a year or something. So yeah. But anyway, so oil, you know, again, kind of doing this thing here. Let's kind of keep zooming out here a bit. Look at that. That's crazy, isn't it? Look at this, guys. This is 80, 86, 84. First time it's ever gone negative in the history of NYMEX. So definitely kind of crazy there. And, you know, if you're looking at this here, I mean, if you just kind of count, it goes 1, 2, 3, 4, 5, it seems like, right? So, again, I've talked about, and a lot of people don't like this idea. It kind of worries them a bit, and I don't blame them. But I've talked about the idea that we're going to have another event that takes us potentially even below that 40 there. Because, again, this would be 5 down. It'd be 3 up and then 5 down. So it gives us an ABC, right? We'll see what happens. But nonetheless, I think overall we're probably going to get up here. I think there's a good chance we could get up here into the mid, maybe upper hundreds before pulling back really well. Really, really well. So we'll see what happens with all that. I know OPEC had a non-agreement this past week. You know, and everybody kind of walked out on their oil stuff. So, you know, we'll see what kind of effect overall that has. But, man, your weekly here, you know, we've got bearish divergence up here on the weekly. We've got up here well into overbought here, and we're crossing down bearishly on Stochk RSI. Right here, you know, again, moving in between the pivot and the R1. Reject the R1, come on back down to the pivot, maybe. So, again, you know, coming out of here, you get a 1, 2. Could be a 3, 4, you know, and then a 1, 2, 3, 4, 5 maybe coming out. We just got to see how it works out here locally to kind of get a better idea of what we're looking at there. Hey there, Baker. What's going on, man? And, oh my gosh, I can't even see here. Is that E2? Or is that ES? Oh my gosh, my eyes are so messed up. OZ. Hey there, good to see you checking in. Sorry, I've got bad eyes. I got glasses coming next week. So, good to see you checking in. TV Kamal, what's up, man? He says, what's going on with Sol USDT? Well, let's find out. My last update was, looks like about 10 days ago. You know, it looks like we're having some sideways here right around the descending resistance, which is right around the pivot on the 4-hour here. This is just sideways. Right now I've got it as a possible 1, 2 here, working on 3, which would give us a minimum target of 61,285. But we'll see what happens here. Right now it's just sideways. So looking for that break and to continue up there. So, yeah, nothing's really kind of changed on this. Just trying to see if we can't get that breakout and have it popping up there. I would say if you're long or if you want to be long, I'd say get concerned if it drops below this swing low right here, which is $26 and 0.659. Right here, because that looks like that might be a 1, 2, 3 if it does, or an ABC, I guess would it be. And so that would just be corrective and head down further. So, and so maybe it's, you know, yeah. That would be my only concern. Until that point, you know, I think still possibly looking to the upside. But that would kind of make me change possibilities with my thoughts there. So it doesn't look like we're higher here. Now your highs were over here. So, you know, again, looking at potentially ABC like that. Ethereum, Bitcoin, is that at an interesting thing? At an interesting point? Let's see. Oh man, this has been a few months since I looked at this, huh? Let's see here. I thought I had one that I did that I updated this chart. Did I really? Maybe I've got it listed in there some different way. Oh, wait, no. This is... No. Oh, well. I guess I don't have one that's updated here. Let me see what we've got. What do we got here? Yeah, let me make a new one. Zoom back out here a bit. Kind of zoom out. Let's see what the weekly looks like. A bigger time frame here. So get rid of this count here. Let's see, so this looks like 1, 2, 3, 4, 5. So this gives us 1, 2. 1, 2. Looks like 3, 4. Looks like we got a fifth leg still coming. Because this is a 1, 2, 3 here. How far do we pull back? Just pull back right to the 38.2. It looks like, yeah, it's right beyond the 38.2. It looks like we're working up for a fifth wave here. By the way, this is the weekly chart for these of you not paying attention to that. This gives us a 618 up here at 0.0872824 So I'm write that again there. 0.08. What is that? 383672. Nope. God dog, I hit the wrong one there. 0.0872824. Man, getting old's harsh on your eyes, man. Tell you what. Are we still on track to hit 100K this cycle? For who? For what? Bitcoin? You mean other people that said that's definitely where we're going? It's a possibility. I don't know. It depends right now what's going on with where we're at, really. It really depends on if the bottom's in right now or if we drop below, you know, that 30,000 swing low, 28,800 swing low or whatever that was. If the bottom's in here, there's a good chance that we'll pop that by, you know, probably even by the end of the year. If we drop down below, though, it makes it questionable. Makes it questionable. Yeah. Let's see here. So, yeah, I mean, if I'm looking here, it looks like we got 1, 2, and then 3, 4, and then 5. So that gives us a 1, 2, 1, 2, 3, 4. Looks like we should be heading up here toward 0.08. Yeah, 0.0872824 at least. Minimum wave 3. Let me make sure that aligns with this right here. If this is 1, 2. Let's see here. Yeah, that gets us well above. That gets us almost the 2. That gets us just above the 2618 extension of wave 1. So 2618 is a common wave 3 extension of wave 1. Yeah. So yeah, it looks like we're doing that, and then we should pull back probably around this swing low here at around 0.0565 kind of area, and then head on up, and we'll probably be targeting, I would think, 0.1136 kind of area here. Let me see, 1, 2, 3. If we do hit that, we pull back there. Yeah, probably right there. Yeah, that gets us pretty close to that area up there. I think we'd have a stretch out into that. I think because that's that, as you can see here, that's that weekly supply structure right up here in the wick. So that's usually a common target there. And that's also the pattern target area of this wedge here. And then, of course, we have the pattern target of this channelish thing here, which actually could be another wedge. You know, you can have it like this here. So you bottom, top, top. So it becomes like this. And then break out there. So either way, that target gets you up here around the EQ of this other range up here, 0.1497. So I think a lot of it's going to depend on just how this end of this year happens here. So yeah. Some possibilities on there for sure. Let me see. So we did drop down below here. Let's see. 3 here. So the drop down below this, again, looks like we've got a 1, A, B, C, 2, 1, 2, 3, 4, 5. So if that's the case, that would be an A, a B, and a C because we've dropped down below this here. So this again would be a 1, 2. And then it looks like we've got a 1, 2 here, and that would be a 3 coming down. So really, really locally, we would have a 3 right here at about 33, 376. That's that very local one. That's this 1, 2, 3 here. But that looks like that's just about the EQ of this demand structure right here. Oh, look at that. Almost perfect. So, yeah, we'll see. I think that's quite possibly where it's heading. And then you'll have 5 down here. And that would make sense. That would give us, let me see here. From up here, that would be then a 1, 2. So this is interesting. All right. So we've got a 1, 2 here. We got a 1, 2 or an AB, and then we have a 1, 2, potentially 3 down here, 4 up, and then 5, which stops us prior to the swing low here. Yeah, this is why I said if we get the drop down, it's your first clue, but we still need to drop down below this wave parentheses 2 here to kind of signal that we're headed lower. What's going on here? ABC, ABC. Because it's potential that you can get like an ABC here and then an ABC here. So then we have to look and go, okay, well, what else is going on here then? So then what you may have here is a 1, 2, 3, 4, 5. And then you have an ABC up, ABC down, and you'll have 5 more back up. And this is how the chop kills you guys, man. This is how the chop kills you because you can get this expanded or this flat right here. So if this is, again, we're looking at the possibility. Remember that this could be, like from right here, it could be 1, and then this could be 2 playing out, but it plays out as a flat. So A, B, C, A, B, C, which would take you 90% down of A here. And then you'd be looking for price to get probably right up here around 34,750 or so, right up into this block right here. Oops. Now it could go higher, but you know, getting up toward this kind of area right here around the pivot, that block should hold some stopping power in it. And then, you know, that would just be 1 down and then A, B, C for flat for 2. And then we come down. Because what will happen is everybody will see it coming down here and they'll try to front run the breakdown. And they'll just get caught as it takes off back up the other way for 5 more. All right? So that's why you're looking for this invalidation level. This is what most people don't understand about Elliott Wave. You can have whatever count you want, but understand where price absolutely needs to get to confirm or invalidate your position. You absolutely have to do that. Yeah, because otherwise you're going to get caught with it. You're going to try and, front run this breakdown here, and instead it'll just hit that 33,170 kind of area and head back up, and you'll be stuck with it. Yeah, so at least locally here, if we're breaking down below this wave 2, even then you could still have ABC here. You have to watch that count. It could come further and then 5 up. But you definitely need to get down below this, parentheses 2, which would actually be 1 here from the top coming down, to, increase your confidence that maybe, this is a 1, 2, and heading down. But again, if I'm counting this, guys, I've got a 1, this is one wave here. And then this is an ABC down, and then again, this is a, A, B, and then 1, 2, 3, 4, 5. So A, B, C up. So if we get 1 up and then ABC down, ABC up, we could be looking at 5 down this way as well. See, there's just a lot of stuff going on. This is the problem with sideways, guys. So this is why I just, kind of talked to Discord about really paying attention to those larger levels. Because the larger levels are going to be the things you're going to have to watch out for. Those are the ones that, that anything else in between with all this overlap and threes going on, you need the breakouts or the breakdowns of those larger levels to really kind of say, okay, things are much more likely to be one than the other. So again, until you get a breakdown of this here, it's still possible you can get a breakout up here. So yeah, that's where we're looking. Bigger picture, and this is just trying to get these smaller time frames in here. Bigger pictures, of course. If I'm trading larger time frames here, same thing. You're basically looking at the swing low, the swing high. If I'm dropping through the swing low, just looking at structure here, I'm looking at it to target this swing low area here, which is right in this area. Breakdown through that then has me looking down here toward this area. So without Elliott waves, that's what I'm looking at. Again, if we're breaking up through here, I'm looking at this. If we break up through that, then I'm looking at this. If we break up through that, then we're looking to head on up here toward this up here. So that's how I look at that. Let me see here. And that way you don't have to worry about, what's it called? Elliott wave counts on that. But right here, again, you have your high, you have your low, high, higher low, higher high. So, I mean, at least off this June, June 22nd? At least off that swing low, right now, you're still in a bullish market structure off that swing low. And that changes, though, if you drop below this swing low here. It comes down below that. Well, now you don't have your low, high, higher, low, higher, high. Well, I guess you do actually. You got to get below this one over here. So if you drop down below this here at 30,520, that'll break down this bullish market structure. But until then, it's still bullish market structure again. Low, high, higher, low, higher, high. So just another way to look at it there. But overall, guys, it's sideways right here, it's sideways right here, and it's sideways right here. So really all it's doing is you've got this big sideways here, which consolidates into sideways over here, which consolidates into sideways even more right here. So you see it's just kind of consolidating more and more and more on all that. But again, notice where we're finding that support here is where we had that previous support. Right there. So you just want to see some impulsive movement one way or the other and then go with it. You know, a good clue obviously is on the larger time frames, breaking out impulsively above your pivot. That's a, you know, it's usually a good sign. In this case, there's a swing high right above it. So you want to get above the pivot and that swing high. And then it brings you to that swing high. And then, I don't know, you'll probably find some resistance right in this area here. And then you'll be looking at this up here. Now, if you can break out of this, you just have this little bit up here. That shouldn't be a problem. And that says, hey, bottom's in. You're heading up then. But until that happens, guys, if you're trading this, you're having smaller and smaller trades to trade ranges to trade in. So you got to be careful with that. Don't lose all your money as it's going sideways here. It's not worth it. I know a lot of y'all made some good money here. I mean, made some good money here. Don't lose it in this sideways. All right? This chart here. Excuse me. If this is accumulation, this is kind of what I'm looking at potentially. So again, like I said, we're just kind of doing this sideways here. This phase E will still be over here. Phase D. But remember, your longest phase should always be phase B. That's your building of a cause there. Well, right here, I guess. This whole thing. So if you're ever doing this and you've got like this and phase D continues playing out there, just know that your phases are wrong. Remember, Wyckoff isn't about projecting. Wyckoff is about understanding potentially what's going on here. And that doesn't happen at the beginning. You have to, you know, as it's playing along, you have to see it. Right now, this is potentially the structure. But if this just continues going sideways here for another month and a half, this may all still be wave B, phase B here. And instead of a spring, I mean, it's still a spring. It's this drop below the range low. But it may just be your phase B ST down here that dips right below the swing low there. And then goes up for D, or I'm sorry, then goes up and then it'll come down maybe for C and then do a spring, or just an LPS and then head up. So just because we have this like this here doesn't mean this is definitive and it's done. We need each phase to follow through. So we would need phase D to start kicking it in and heading up if that's the case. Okay? Let's see who showed up here. Demas, what's going on? Good to see you checking in. So yeah, I want to put this out there because there's so much Wyckoff nonsense going online again. I just want you guys to be sure that you understand. First of all, if it's Wyckoff and it doesn't have a volume analysis with the price action, it's just got some stupid schematic over there, walk away. They don't know what they're talking about. They're hoping. Okay? Wyckoff is all about price action and a volume analysis. You need that volume on there. Okay? Secondly, don't think that Wyckoff is going to project anything. It doesn't. Wyckoff is to help you try to understand what may be going on in the range, to give you an idea of where, which way price may end up going when it breaks out. Okay? Third thing, it's not, again, about projecting even with what's going on within the range. Like I said, right now, this is possibly a spring right here. But it's also possible, as I told you when we first marked this, that this is still just the ST here in phase B. And this could still be phase B playing out. Then we'd have a phase C to finish, and then a phase D and a phase E. Okay? So right now, we're kind of looking at this. But again, if this is correct, we really need to see price kind of start taking off higher. If it continues just to meander sideways a bit, I'm going to start looking at this still as phase B here. And so the thing about that is, if this is still phase B here, and it's, whenever it breaks out, this is, again, right now we're looking at this area as phase B, right? Over here or further out, we're looking at much larger phase B, which means price is going to move stronger and further out of the range when it does. The longer phase B develops, the further price is going to move out of the range. All right? So There we go. And it is 1 o'clock, guys, so I need to get out of here. But anyway, yeah, so this is kind of where we're at here. Like I said, Tier 3, those of you guys that are here, we were going to try to do that Wyckoff today that we usually do on Mondays. But I'm really backed up with all the DMs and everything else. So let's go ahead and make it Friday that we'll do our makeup session. And then, of course, we'll be back to every Monday on that. Don't forget, tomorrow, though, we're going to do our tips, tricks, and techniques live stream for you guys at Tier 3. And then Thursday, we're going to do our Elliott Wave live stream for you guys in Tier 3. So for everybody else, remember, you can still join us. We would absolutely love to have you with us. I think we're a pretty great group of people, pretty passionate and yet still logical and helpful and all those great things that you want out of people that you're hanging with. But you can go right there to howtotradetowin.com and put in that code for our Tier 3 annual package membership subscription. And that'll get you in with us for a year for the absolute lowest price that we've ever done there, guys, okay? So we'd love to see you. Hopefully you'll join in. If not, I'll be back on Friday at 11 a.m. Central Standard Time, and we'll take a look at the charts again and kind of tell you where we are. Hopefully by then we'll have something, especially with Bitcoin, some kind of real worked out, listen, we're done, right? We're actually got direction going instead of all this sideways. But until then, we'll keep on working with the sideways and, trying to find these shorter term levels to watch as it moves in, okay? You guys have a great week, as always. Y'all trade safe. And remember, don't spend all your day and time around the charts, guys. Take some time off. You have to do that. You have to clear your mind. You have to reset. You may not realize how stressed out you are. It's all in the back of your head, all that stress. And it'll make you start acting emotionally and irrationally. You don't want to do that, all right? So you guys have a great day. Remember, the only thing you control in the market is how much you lose. That's absolutely it. So keep working on risk management. You guys have a great day, great week. And we'll catch y'all later. Take care.